Thank you, everybody, for attending today. My name is Nancy Williamson. I'm a CPA and the founder of Redline Business Advisors, and this is my son, Dylan. He's the CEO and our resident real estate tax strategist. And on the side, he's the proud owner of a 2000 F-350 that he's restoring. So he always welcomes conversations about vehicles. It's his favorite thing to do since he was a little kid. Together, we help shop owners across the country take the guesswork out of their finances so that you can focus on running a very strong and successful business. It was interesting because I spoke with a shop owner this week. He's a prospect. He was looking at our fractional CFO services. He had 6 shops. And I asked him what his goal was in talking to or hiring a fractional CFO. And he said, it's just really simple. I want to sleep better at night, knowing that I'm doing everything I can to protect and preserve the business I've worked so hard to build. And, this is kind of what this is all about. We're going to give you some things to review in your books that every shop owner needs to understand. How getting things right gives you more clarity, more control, and more confidence, and allows you to sleep at night. So with that, we'll move to the next slide. This is who we are. We are Redline Business Advisors. We help automotive shop owners gain clarity and control over their financials. Our mission is to ensure that business owners have financial peace. We do monthly bookkeeping, profit first cash flow management, tax strategy preparation, and fractional CFO services all under one roof. We help auto shop owners across the nation. So we're well versed in all things to do with auto repair. This is our second webinar. Our first webinar, we did how to read your financial statements with confidence. We broke down the income statement, balance sheet, giving shop owners a clear understanding of how to interpret your financials and spot what matters most. Jacob was kind enough to upload this to our YouTube channel, so you can find, if you missed that webinar or you'd like to footnote it, we would love if you would follow us. So you can search us, Redline Business Advisors. And you can also go to our website, redlineba.com, and look under blogs, and it's posted there. A quick link is posted there. We're going to have some upcoming Redline webinars. Will include mastering cash flows, smart tax moves, are you profitable or just busy, and the owner's scorecard. And we welcome any suggestions for things that you would like to learn more about. We're always happy to change up and introduce new webinars and change the order of how we do things to better serve the community. So what you'll learn today. We really want to talk about why good bookkeeping is so important. It is just good enough doesn't cut it when it comes to your books. And I think the big thing that I find when I talk to shop owners is that some think that the only person who needs their P&L is the tax man, their tax preparer, and they need to keep this set of books so that they can prepare their tax return, and they don't use it as a daily or weekly monitor of how their business is doing. The shop owners that I work with who have learned their financial statements are wildly more successful than the shop owners I work with who are brand new. It might have been running their shop for a number of years, but they don't use their books on a daily, weekly business to check and monitor how their business is doing. So we're going to go over why it's important. We're going to show you some signs and things that show you that your books aren't accurate and what you can do to address that. What does accuracy really mean? Like, what is it? Is there, how do you check the box to feel comfortable that your books are truly accurate? And then the risk of not having accurate books will also be covered. We'll give you an action plan as well that you can take yourself, or that you can review with your internal bookkeeper or review with your external bookkeeper, so that you walk away with an action plan after today's meeting. That's the goal of what we're going to accomplish today. So take it away, Dylan.
All right, I'm going to cover the first part. What does accurate books actually mean? You can see everything on the right, but breaking it down a little further, every dollar accounted for, that means that you're using a system like QuickBooks, and that bank feed is completely clear. You don't have a credit card sitting off to the side with 2,000 transactions on it, and you're like, oh, don't worry about that guy. right? Because then your financials can't be accurate because you don't have everything captured. So it's important to have all the bank accounts, all the credit cards, all hooked up, and all of the transactions categorized, and hopefully categorized accurately. Then that takes us to the liabilities and receivables, right? Are your loans up to date? Are your credit cards, your lines of credit? Do you know how much liability you have? Is it reflected accurately? Even if that's scary, even if there's a ton of them, it is important to know how much it is so you can start tackling it. Your COGS and your inventory. I think shops, usually don't do inventory. We have some that do, but I know a lot of it is kind of as you go. But that's super important to be able to know what your margins are. Are you charging enough, for what the service you're doing? You won't know that unless we know what it's costing you, right? This is a big one that we see a lot. Owners draws, personal expenses have got to be kept separate. Doesn't really matter what kind of tax entity you are, if you're an S corp or whatever, that will dictate whether you have a salary and a W-2 on there or not. But you got to keep the owner expenses, the personal expenses, the buying TVs and Starbucks every single morning and Uber Eats 3 days a week. Got to keep a lot of that stuff separate. And then being able to just trust your reporting, right? So that you can do these analysis and know where your company is at. Go to the next slide cover. So why it matters, right? You can price your jobs better. You know where you're at. You know if you can be giving discounts or if you can't give discounts. In fact, you need to be raising your prices, right? And you're going to protect yourself from audits. There's no way to be audit proof, but our goal is to make you auditable, right? Where if an audit does come through, you got nothing to sweat. And we'll talk more about audits later. Cash flow, whether you have it or you actually don't, even though it says you're profitable, why, right? You can solve those problems instead of them just sitting in the back of your mind going, am I? It says I'm profitable. Why don't I have any money? And if you are hopefully cash flow positive in a good way, what do you do with that? Should you be reinvesting it? Should you be paying yourself? Should you be looking for your next acquisition? What to do next? Right, pre-shop value. If someone wants to come buy your shop, having clean financials is one of the best ways to increase your value, and it will never decrease your value. No one's ever going, oh man, his financials are flawless. Look how good this looks for the whole business. We want less money, right? it helps a ton with potentials of being bought. And I'm sure for a lot of you that are buying multiple shops or expanding your own shops, when you go to a shop and they hand you a paper printout of financials that half of it's in uncategorized, you're like, what am I supposed to do with this? It definitely helps, and it keeps you in control, right? Even if you have a bookkeeper, you know what you're looking at, you know what strategic decisions to make to take the company upwards and do what you want with it.
So here's 5 quick questions that you should be asking yourself, asking your bookkeeper, and getting comfortable with when you look at your monthly financials. So, do sales match bank deposits? I know most every shop owner has a point of sale system, whether it's Techmetrics or Shopware or whatever, NapaTrax, everybody's running a point of sale systems. So is the revenue and money deposited or shown as collected in that system agree with your bank deposits that should be shown in QuickBooks? That's a quick and easy thing to do, is to run the monthly report out of your point of sale system and then go to your bank statement and look at total deposits. Does it agree? Why or why not? Okay, so those are some easy things that you can do just to start to see. That's something we do every month, is make sure that those match up internally. We do a reconciliation for all of our auto shop clients and ask questions if it doesn't. Our owner draws clearly separated. So this is something that can easily be recorded as an expense instead of an owner draw, which is not an expense. So, take a look at the last time you took a draw. Maybe you withdrew $3,000. How's that $3,000 recorded in your books? Just do a search for it. Ask your bookkeeper. Simple. Just look for things like that to see if it's accurate or not. Are personal expenses kept out of your shop? Look at the last time you used an Uber Eats, for home. Somebody called in on Uber Eats, ordered a meal, you fed your family, and you accidentally pulled out your credit card, your business credit card, say your personal credit card. How is that recorded? It should be recorded as an owner draw, not as a meals expense. If you're recording it at meals expense, you're skewing the true operations of your shop. Are loans and payments recorded properly? All of us have our credit cards, the app on our phone. Pull up that app that shows you what your balance is on your business credit card, and then pull up the balance sheet in QuickBooks and see if it agrees. I had a very successful shop owner who came to me and wanted to know if his books were right. And I pulled up his balance sheet, and he had $384,000 negative Amex credit card balance. So all of his payments had been recorded for 2 years, and none of the transactions had been recorded, and his bank and his tax returns had been prepared like that. So all of those expenses were not captured. It's quick and easy. Pull it up on your app, look at the balance sheet, see if they agree or if they're materially close or not. If they're not, ask some questions. Find out why.
And sometimes it's easy too, just to pull up the balance sheet, and is the credit card negative? You should never have a negative $384,000 credit card on balance sheet.
Negative.
Right? Like that's, yeah, something probably wrong there.
Exactly. And then also check your bank reconciliations. Are your bank accounts being reconciled? Is the ending bank balance accurate? Nowadays, it used to be a lot more difficult to kind of do a check on that because we wrote checks, and sometimes checks didn't clear the bank until, weeks after we wrote them. Or sometimes we had to take our bank deposits to the bank, and those we hadn't taken it, we'd left it in our desk drawer, so that bank deposit is in transit. We don't see that much anymore. Everybody's using ACH, everybody's using direct pay, and most of the time we're accepting credit cards that deposit into the bank automatically. So your bank account your bank balance that you pull up in your app should be really close to what's showing on your balance sheet and what you are working with on a daily basis. If it's not, you need to ask some questions why that is. So these are some really quick, great things that you can just start with to see how accurate your books are and get a feel for whether you should be digging deeper and asking more questions. So what's your action plan? So you do those 5 things and you've got questions, right? You're really not clear and you don't know if you're right or not. There's nothing wrong with asking questions and getting comfortable with your numbers. So here's your action plan, okay? If you have a bookkeeper that comes to your shop or sits next to you at the desk next to you, you do these few things and you're just not real comfortable that the information shown in your books is accurate, set up a 30-minute review with your bookkeeper, right? Call her into your office, ask to do a Zoom call if she's, if she doesn't sit with you and she's outside your office and works remotely. Set up a 30-minute review and ask her to show you these things. Ask her to show you the last time she did a bank reconciliation. Ask her the last time, give me a list of all of my owner draws that you've recorded as owner draws. Show me my loan entries, like is she booking interest monthly to accrue interest and show your true loan balance? Look at your sales versus the deposits. Again, all of these things are really easy to kind of just do a quick audit, 30 minutes, show me that these things are being done. And then ask her to pull up the balance sheet and the profit and loss and look at those things and ask to review those. What is this? Just ask questions, get comfortable with the numbers. And then if everything is in great shape, then great, set a monthly review with her. Set a set time on the 10th of every month that we're going to review the previous month's books together. I highly recommend that you review your books weekly, but set up a review time with her monthly to get comfortable with the numbers and make sure that everything's being done accurately. And do that as a standing routine. If these questions can't be answered, then ask her when they can be, when can this be updated? Like, when can we have another meeting to review these items, because these are important. If you have an external bookkeeping company, it might be a little harder to set up a meeting. So what I would suggest, and what we do for our clients, is we do a monthly Loom video where we review the balance sheet, the profit and loss, and talk about anomalies or things that we're missing. Like, hey, I still haven't got your latest loan statement from your idle loan. Would you please upload that so I can book the interest? So we have kind of a conversation through the Loom video, but we show everything that we've done, and so that you have a visual that you can follow along with. But don't be afraid to ask questions. You can even ask those people, how do I pull up the balance sheet? How do I pull up the P&L? How do I check these things? So that on a weekly basis, you can go in and make sure things are being done timely and accurate. It doesn't mean you have to do the work, but it's super important that you review and feel comfortable with the numbers every month.
And then what's your risk? What happens if you don't do this, right? I think that's always the risk to reward ratio. So go to the next slide. So the first one is going to be audits. Big buzzword. Everyone always likes to hear about audits. So there's two types of audits: your sales tax audit and your full-on federal IRS audit. Likelihood, sales tax audits are a lot more likely, right? Automated state reviews, spot mismatch POS systems versus bank totals, random audits. It's a lot, more likely for a sales tax audit. And what happens if you get that wrong? Penalties, interest, you can be held personally liable. And honestly, we see a ton of issues with sales tax in a lot of different businesses that aren't negligent or aren't, people trying to get out of paying their sales tax. It's, oh, I didn't realize this month is on cash basis and now we're on accrual basis, and so I paid the wrong amounts. And that we see that a lot. I know, like with Tech Metrics and a lot of those, they track the taxable sales tax really well. But sales tax is definitely a big point that needs to be taken seriously. Your IRS audit, not very likely, less than 1% annual, right? They focus on high risk areas, and you're going to look at fines, penalties, interest, stuff like that. You definitely need to be more aware of the sales tax, and hopefully, your POS system is handling that in a good way. But that's something that you need to be able to check and ensure, because it's a lot more likely to get looked at.
And that's specifically why every month we tie up the point of sale system to the bank deposits to make sure that they match. Because of sales, the likelihood of having a sales tax audit is just so much higher than an IRS audit.
All right, and then what are the other risks? What are the other downsides if you're not doing this? It's hard to get loans, right? Whether it's an idle loan or someone wants to buy your business, or you want to go buy a business, or it's hard. Banks don't like financials that aren't clean, right? So if you're looking for lending, loans, that kind of stuff, that's going to cause problems. Delays cost opportunities, right? Another buyer might swoop in while you're paying to get your books cleaned up. Higher cost capital, increased scrutiny. You'll spend weeks or months just reconstructing numbers for due diligence, or what we see all the time is people don't like looking at their financials, so they run it in an Excel spreadsheet, which isn't accurate. It doesn't actually reflect what's going on, right? And you're still not sleeping at night because you probably know it doesn't. And like we talked about earlier, lower valuation, it can kill the deal. It can make people want less money to pay you, or all that good stuff. So there's definitely, and there's not any things we're not talking about. You could be running your business better, right? You could be making more money, but you don't know where that's at. So that's why, our slogan is it starts with the books, because it does almost in every facet as a business owner.
We get lots of calls from prospects as well who think they're leaving tax dollars on the table. They want to save on taxes. Their tax bill is too high, but their books are such a mess that we can't tell where they're at, whether they're up or down. That's why everything starts with the books. I mean, that's the basics. So
Or
as
you get
Dylan's,
the entertaining one that's not so entertaining, where their tax return says they didn't make any money, and you open their books up and wow, it says here you made a lot of money. This is the IRS auditor's dream right here. Do they match? Do you have that backup?
Yeah, so it's super important. So what are the key takeaways before we get to questions and answers? So, you know, accurate books gives you confidence. You can make smarter decisions when you trust your numbers. The data has to reflect the reality and help you make better decisions. You can, get bank loans. You can buy other businesses. You can feel confident in selling your business. You feel sleep at night because you don't have to worry about a sales tax audit. Or like Dylan said, you're going to get audited or not, right? There's nothing we can do about that, but we can make sure that your books are auditable and that you can sleep at night knowing that you can prove yourself. So super important. This isn't something that's just for the tax man, for your tax preparer. This is something that you should feel comfortable using every week. It's just more than compliance. It protects your shop, it protects your cash flow, it protects your future. It's not negotiable. This isn't something that you can turn over to your bookkeeper. Your bookkeeper doesn't care as much about your situation as you do. So he or she might be doing the absolutely best she can, but you need to ask more questions and help make sure the books are accurate. Again, better positioning for growth or sale. I cannot overemphasize this enough. When you find that opportunity and you want to buy a shop, you need good financials for the bank. If you're fed up and want to sell, then you need good financials for your buyer. So, act now. It's really important. It's never too late to get things in order. We see it every day and how people get it all in order. It's important that you take action today and sleep well, knowing that you're doing what you can. So anybody submit any questions or answers, Gary or Jacob? Questions we can answer, but I don't know if anybody submitted any questions.
I don't think we have any live questions, so we'll go to the ones that were submitted over email. All right. Gary, do you want to take it away?
So one of them here is, and I thought it was perfect to start off with. Several actually basically said, I'm not an accountant. How do I even know what to look at?
Well, I think we gave some good tips today, some things that you can do to start feeling out the accuracy of your books. Starting with your point of sale. Everybody has a point of sale. I'm sure you're more familiar with that with your books. And then, using your bank apps, use your bank app, use your credit card app, and compare that to your books and see if they're way off.
And go, you're not an accountant, but I bet you roughly know where your money is going. Go open up your profit and loss statement, and if it says that there's $100,000 in office supplies, you're like, I don't think I bought that much office supplies. Like, look at it, and I bet you'll be able to tell. Or if there's, everyone's favorite uncategorized expense, you have a bunch of stuff in there. Well, that's probably not right. Like, I think most people would be surprised if you just go in there and look. You probably have an inkling that if something's off or not, and then ask questions.
And we still haven't got any more questions, so I'm going to feed right into this next one. Fits perfectly for what y'all are saying, because I think a lot of owners, as an owner myself that I had a business before, I agree. It says here, I'm afraid to look too deep because I don't think I'll like what I find. Is this normal?
Yes.
It is.
Yeah.
It is. But I will tell you that, and I'm going to use this example again. I mentioned it in the last webinar because it's so fresh on my mind. We had a shop owner in Colorado come to us and he hadn't filed tax returns in 3 years. He wasn't sleeping at night. He was super stressed out. To his credit, he was totally committed to get everything caught up, and he was very organized. So he had found us all his bank statements, found us all his credit card statements, found us all his loan statements, and we got everything updated. And it took us a while. We got everything updated for all 3 years. We filed all 3 years tax returns, and that all got concluded in October of last year. And he contacted me in March and said that he was thinking about selling the business and moving back closer to home. He had quite a commute, and the commute was wearing on him. And he got a top dollar offer for his business. And he said that I know the reason why I got that top offer was because I finally had my act together and had good, clean financials. And it soared through due diligence. There was no negotiating on the price. It really was a great success story. So um, everybody starts somewhere. So I think it's just a matter of taking the first step and developing an action plan.
Okay, the last question I have here that was sent in, I have quite a few of them that are kind of all the same. I've lumped them in. Is it better to outsource books or keep them in-house with someone that I trust? I think this is a great question because a lot of them has a variations out there. So I think this was a good one just to answer for them on what we see.
You want to tackle that one?
I'd say that we're a little bit biased as an outsource, accounting firm, but with that in mind, I'd say outsourcing is better. But I think we have some pretty good reasons as to why to back that up. And first and foremost, the expertise you get in a firm for the price is really hard to beat. You have someone you trust, they're a bookkeeper, they might have years of experience, but they're not multiple, CPAs, accountants, tax preparers, everything that you get in a firm for generally probably cheaper than you'd just be paying that. You get so much more expertise at an outsourced firm as opposed to hiring one single person. Plus the redundancy. I know that's probably one of that we hit on a lot is that we have multiple people who know your books. That way, if somebody goes on maternity leave, gets trips and falls and hurts themselves chasing the margarita truck down the street, you don't have one single point of failure with a firm. Nancy, you want to jump on anything else?
I think those are all great reasons. And the other one is that the likelihood of theft and fraud internally, because so much in small shops, so much can be centered at one point of contact, the bookkeeper. She can have a lot of ownership over a lot of money and a lot of moving parts and not a lot of oversight. And when you outsource and separate those inflection points. So maybe you have an office manager that takes money to the bank. Well, you've got your outsourced bookkeeper that's checking and making sure that money gets to the bank. So there's lots of redundancy and separation of duty that really prevents bad things from happening internally. So I think that's probably the big three reasons.
Yeah, 9 times out of 10, it's cheaper too.
Yeah, that too. That too. So I think that wraps it up for today. We are, again, Redline Business Advisors. We would love to review your books if that would be helpful for you. Mention that you have attended one of our webinars or saw one of our webinars, and we'll be happy to give you 30 to 45 minutes of our time looking at your books and developing an action plan with you. Happy to do that. Contact us at info@redlineba.com. Gary's phone number is 512-518-5556. And thank you all again for attending, and look for our invitation for the next webinars in our series.
All right. Thank you guys so much. And once again, if there are any subjects you'd like to hear us discuss, you can let us know and we will add them to the list. All right. Have a great day, everyone. Bye-bye.